welcome to our new interview at our Digital Health Inside Out channel. And I'll let my co-host Sergey to introduce our today's guest. But first, as a reminder, please subscribe to our channel. Thank you.
Yeah, no, I'm happy to have Christina Farr here on our show. Christina is obviously a leader in the industry, and I would say one of the biggest industry insiders because she kind of knows all sides of the story. Started as a reporter, CNBC, Thomson Reuters, quite a few well-known outlets, and then of course switched to the dark side. Unfortunately, no, I'm just kidding. And now she runs Second Opinion Media, co-founded Scrub Capital, which is an early stage healthcare VC fund, and also advises Manat Health. And I actually have a long list of accomplishments, but I don't know, Christina, would you like to maybe mention something that I didn't, just to complete your very accomplished biography?
Yeah, I don't know if I have too much more to add. I run a newsletter called Second Opinion, so I still write for those that want to keep up with me. And a lot of what I do now is less news and more context and analysis. So not just the what happened, but the why. So you can find me at secondopinion.media. And then I also have my own podcast called Lifers, which is really kind of around the theme that I know you both care about a lot, which is that US healthcare is extremely hard. So let's not gloss over that and pretend it's just all kind of rainbows and fairies, and actually get into some of the tactical operational playbooks that can make these businesses more successful. So that's Lifers, and it's a pleasure to join you both. Sounds like we might be three Europeans here talking about American healthcare. Some wonderful irony in all that, but maybe the foreigner's perspective has value.
I just want to add that what drew me to your work is just, again, like I'm trying to be, I guess always trying to be brutally honest in this industry, and you started as an investigative journalist, just giving your honest, data-driven analysis of the industry, not only healthcare, but also technology. You've written about Facebook, Amazon, other companies from a very critical lens. And this is, I'm trying to do a little bit of that right now, and I have high respect for your work that you've done over all these years. Really appreciate it.
Thank
And of
you.
course, I forgot that, we need to mention that, you have like a really massive following. Like, I don't know, maybe I'm kind of outdated on numbers here, but, Second Opinion Media, 50,000 plus subscribers, your own following across platforms is like 300,000 or 400,000 now. So, even from the perspective of attracting, subscribers and followers, is really, really impressive.
Sergey is just jealous.
Yeah, exactly.
I feel like I have very few subscribers compared to the people who, I see on Instagram, trying to hawk random stuff. But it's work. It's great that I feel like I'm talking about all these really grokky, insidery topics about healthcare, and that there's that many people that care about that. And so we'll have to see, how big it can get. But one thing I really take seriously is that, even as we think about expanding into more consumer audiences and reaching more people about, to teach them about healthcare, that we continue to be really smart and nuanced and thoughtful. And it's harder to build a platform with that thesis. I think if I was to just say really extremist things, obviously that gets more likes and mentions, but it's just not what I'm trying to do. So we'll see how big it can get, but I'm having the time of my life.
I was gonna say, out of us three, you're the actual professional journalist here. Sergey just pretends to be one. I'm not. I'm not in pretending.
Exactly.
Well, I'm not either. I gave all that up, and one reason I am very careful about that is because I view myself as having left journalism in 2020, which is when I left CNBC. To me, it's like I associate it with very professional newsrooms and really strong ethics. I didn't own a single stock back then. That was how pure. it felt like it needed to be. And now I'm invested in all kinds of companies, advising companies. We do partnerships and sponsorships. So I'm certainly not at that level that I was back then. But yeah, so that's why I say I'm not a journalist, but I'm certainly trained in journalism and had an amazing career of almost 10 years in that role. So I have very much a lot of those editorial instincts still, and that very much guides like how I still kind of observe and cover the industry.
We definitely want to talk more about your instincts. And when Sergey told me that we're going to interview you, we're like, we cannot just come up with some simple questions, I know, about AI predictions in healthcare and all that boring stuff. So yeah, we came up with all the tough questions for you. So yeah, let's start with the first one. So you mentioned you left CNBC in December of 2020, and you described stepping away from reporting as bittersweet. And since then, you moved into venture, returned to media, added invest and advisory work on top. So looking back, do you think you might have had a greater impact if you had stayed in journalism full time?
So it's a great question, and I do think about it sometimes. I certainly miss it, but I think as I look across how things have gone, even in the 10 years or less than that, 6, 7 years since I left, it's really tough right now. A lot of my colleagues are no longer in journalism. It's not by choice. It's because newsrooms continue to shrink. We still don't have a viable business model for journalism. I see, a lot of mentorship going away in light of this. I see continued cuts around investigative reporting budgets, data journalism projects. I mean, there are very few newsrooms now that even cover healthcare. So could I have had a big impact? One would hope so, but I may not even have a job, even if I had chosen to stay in that profession. And where I sit now, yes, I'm less pure, in the same way that I might have been when I was a full-time journalist, but um, I feel like I'm innovating at the very edges of media with Second Opinion. I can try a lot of new things that I would not have been able to back in my newsroom days. And I think also the knowledge gained when I went into venture capital. One of the firm that I worked for, I walked in and I was like, I've got this network, I have this following, and they were like, yeah, that's cool. How are your Excel skills? And I'm like, oh no, I haven't really had to do any Excel since I was in university. Gotta dust off those skills, and really had to do all the prep courses on Wall Street prep and get deeper into the finance. And I think that was really important learning for me also, because as a journalist, you could look at a company like Cerebral in the mental health area, and you could say, oh, it's growth at all costs, right? Like that's what's driving that business. As a VC, you can look under the hood and you can look at the unit economics and you can say, oh, it's because we hardly pay, we hardly reimburse for mental health. And when you layer in pharmaceutical medications, suddenly the unit economics start to look more attractive, right, at scale. So then you see it in a different light. You can see exactly why those incentives exist. And I think that's led me to evaluate companies in a very different way, much more of a first principles way. And I see that as being a way that I can add value now to the industry that I couldn't before.
I'm gonna ask you a question that you're gonna hate me for, but kind of like a follow-up, basically. You mentioned your Life First podcast. It's sponsored by A16 Studios. So my question is, would you have the same story out, or stories, I guess, as a reporter right now versus a reporter who has no relations to Andreessen Horowitz?
Well, I mean, you can ask me anything you want. So I'm an open book. I don't have a PR firm representing me. I just say, I just speak my truth, right? So I'll tell you the whole backstory. And I think this is interesting because it relates again to new media, which is that when I started the newsletter, which I actually did when I was in venture capital, was like a way for me to just share some of my theses and ideas. And it didn't have any kind of business motive around it. It was just fun. And, obviously it grew, and that's where it led to a real business. But at some point, a group called Turpentine approached me that was owned by a guy called Eric Torenberg, who's this brilliant new media guy. And he said, we've got this concept of, could we give podcasts to people like you who have a following within like a niche industry, right? They had somebody who built a podcast in HR. They were building a new one in tech that ended up becoming TBPN, which is now like a very hot new media property. Noah Smith, who's an economist. And so they came to me and said, do you want to do something in healthcare? And they gave me free reign to come up with a concept. I started out with just a second opinion podcast, and that eventually became this brand Lifers. And then at some point, they ended up getting acquired by Andreessen Horowitz, so that Eric would basically become a GP, an investment professional at the firm. But they've kept Andreessen Studios as this kind of podcast brand and umbrella of all these sub brands. And obviously we renegotiated all the contracts, but part of it was like, hey, I've got no connectivity to Andreessen Horowitz. Like, nobody's talking to me from the firm. Like, I have no connection to them. I have no, there's no agreement that I have to talk about their portfolio companies or anything like that. So I was fine with that. I don't want to be owned by a venture fund, but partnering with a new media kind of firm, and new media experts seemed really appealing to me. And then part of what I've learned through them is things like YouTube, Spotify. Like, I didn't know, I was like on Twitter and LinkedIn, and I knew how to, share a LinkedIn post that could go viral with my audience, but I had no clue how to do video clips on YouTube. This is like all new to me. And so I will credit them with really teaching me some of these new mediums. And it's putting me like in a space of very low comfort sometimes, because they're like, you got to do, a walk and talk video in your garden, sharing how employer sponsored healthcare in the US even exists in the first place. And I'm like in my garden doing these walk and talk videos, and I can see people being like, who is that weird lady? But I think it's really valuable to do that, at times in life, because this is how a lot of people consume information. They want it short form, they want it video. So I do have this affiliation with them. I have not found, in summary, that it's changed anything around my editorial ethos. But again, I'm also not a journalist like I was, I was trying to do investigative reporting back in the day. We're not really doing that at Second Opinion. We much more focus on analysis. Like a typical story for us might be a guide to reimbursement for some like corner of healthcare. Like, that would be a great Second Opinion story. There's no news, right? You're not investigating a company, but these are useful operational playbooks for my audience, and they eat that kind of thing up. So that's my. I hope that was helpful. I love being asked these tough questions. So keep them coming, and happy to share.
We'll keep on coming. Yes.
I want to talk about your book a little bit. It's called The Storyteller's Advantage. So my question would be, what's the most dangerous story being told in healthcare AI right now? The one that's going to age the worst? What do you think?
That's a really good one. So the story that I feel like is being told in a way that I'm not really happy with is how we gloss over job loss. It really disappoints me. And I think healthcare people need to recognize that systems, especially health systems, are some of the biggest employers in local communities, often rural communities. And I see people in tech talking about job loss in a way that feels like it absolutely lacks humanity. And yeah, like, I understand that, a lot of people are capitalists. And I understand the impulse to speak about it like that. And I also understand that we have far too many people in task-based manual roles that are purely administrative, especially within payers and systems, and that is driving a lot of the labor force. But at the same time, to speak in such a cavalier way about the inevitability of job loss without really us having a dialogue about, how could we protect people's livelihoods? How could we reskill? How could we retrain? How could we redeploy? I think that's the piece of it that will not age well. And every time I hear about it in almost a gleeful way, if somebody's margins are about to improve, it makes me feel like physically ill. And I'm like, where is all of our empathy? Like, where did it go? So that's where I want to be spending more of my time in the months to come.
I love it. And kind of to follow up that, and you wrote a book. I assume you advised to a lot of startups on how to be a good storyteller. So, which company do you think is really good right now in telling their story to the audience?
Well, I don't really think many companies, but I will tell you which founders, because I actually don't really believe in company storytelling. I don't think anyone cares about brands, and that's true. With you look at social media following of brands versus individuals who work at those brands, it's people like to follow people, right? So get out of the mindset first and foremost around the company, like. Let's think about the founders who are doing a good job, and then by association, the company, right, gets this halo effect. So, what's an example I would point to? Well, look at Roe, which I think has had some good and bad press over the years. I initially, when I heard about that company, was extremely skeptical because I just didn't understand this cash pay concept, why people would pay when they had insurance. Lots of questions that I think many folks in the industry shared. But I'll give that founder, Zachariah Raitano, credit that he heard that I felt skeptical or was skeptical, and he reached out to me and said, "I'm in New York. I've got a dog. Do you want to come with me and my dog on a walk? And you can ask me anything you want." We had a lovely 2-hour walk. He did not have an entourage. He did not have staff. He was not, speaking out of his messaging Bible. It was a very authentic moment for us to connect, and I would say that we've stayed in close contact since then. I think he's done a very good job of staying away from this, very hype driven, momentum driven, milestone driven kind of PR that I see most companies viewing as the only way that they can show up publicly, which is like, look at me, 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 me. That's most people, most brands, right? Instead, you see Roe doing a Super Bowl ad, and then what comes out following that is that he writes a 3,000-word piece on his X account of what was the price of the ad, what was the thinking that went into the ad, what was the sales boost that they got from the ad. Here is their evaluation of whether or not they would do another Super Bowl ad and would it make sense for other companies. So many of my founder friends and operator friends shared it, loved it. We ended up republishing it in Second Opinion. And I think that's the perfect example where you didn't have to do that, right? But you chose to do that to support, I believe, authentically other founders. And that leads to a perception of that founder in the industry of just a nice guy. He's just a nice guy, right? And you can't measure that. You can't say, ooh, this blog post then generated X amount of nice guy sentiment. But nice guy sentiment and just being well liked is so useful in so many different ways when you're being reference checked, when somebody asks about a company or a founder, and people generally think of you as being somebody who wants to help. That just goes such a long way. So I wish more founders would just operate with this kind of idea of helping each other, contributing to the, all of our corpus of collective knowledge, helping others avoid making mistakes, instead of hiding all of that operational know-how, and then the only thing that they present to the market is essentially hype. That is, really to me, a very fast path to hype, and then, what comes up must come down.
Chris, I want to get back to your story that, a lot of things happening with journalism, especially in health tech, people being laid off. Just trying to maybe figure out is there actually a way to kind of solve the issue? We had you were nice enough to talk to me a couple of months ago, and I kind of accidentally almost ended up in kind of writing stories and being this, I guess, independent journalist. Wasn't my intentions, basically, like started as a hobby. But I'm noticing, like right now, a lot of stories I write, basically somebody's reaching out to me because they're saying like nobody's writing about this, what they call mainstream media. And maybe that's the problem, if you want to kind of stay as a journalist, you kind of have to go with the company line. And unfortunately, a lot of these outlets, they're being financed by kind of the same people who kind of run the industry, you know, venture capital firms, you know, financial firms, and so you kind of almost like have to go with their story. And I think a lot of this investigative work perhaps being lost, and I'm the guy, complete outsider. People call me, like right now I'm writing about Carbon Health, you know, that went bankrupt, and people are reaching out to me because they're saying like it's been like, what is 3 months, and like nobody's writing anything. And they're saying, you know, I was working for the company, I knew what was happening like years before, but I couldn't say anything. But I want the truth to come out, you know. And so I don't know what, like, if there's a question there, but I guess the question is, how is there a way to change kind of the industry? Is there a way to kind of deliver the truth early that perhaps serves the medical community better? Just, you know, kind of like thinking out loud.
Yeah, I mean, I think back to these operational playbooks. I think this could be the key, because in this world of, you know, massive hype, you know, boom, suddenly a company went bankrupt, right? What was missed in that was this company really struggled with payer contracts. This company started to run out of money, and because typical burn rates can be in the hundreds of thousands of dollars, because this company was overpressured to hire too much in the aftermath of a growth round, or this company just like faced, you know, an acquisition prospect that went south. So many things might have happened that led to this outcome of bankruptcy. But because we don't talk about anything but these positive, momentum driven milestones, and we are so not authentic or honest as an industry, then it just seems like, you know, it's very surprising to the industry when out of the sudden, you know, you hear, if it's even announced, like out of nowhere, you hear that a company has failed, right? And I don't think that that means that you need to share publicly every single bad thing that happens to the business, but I think you can start to do it in even small ways that feel comfortable to you. For instance, imagine you are experiencing a challenge with payer contracting. Could you convene a forum of other founders and operators to discuss this issue? Imagine you are you just went through a really painful EHR migration that lost you 3 months of growth opportunities, and now you're having a hard time with the fundraise. Could you lay that out in a monthly investor update email that covers all the best things that happened that month, in addition to some of the hardest things, and pave the way for the next group of investors to understand why you had slow growth for that period of time and why that decision needed to be made? I think if founders can get into this mindset of just sharing a little bit more to the extent that they can, you know, be comfortable doing so, I think we can move into this space of helping each other, rising each other up, and, you know, being collectively more successful as innovators in an industry that makes it really hard to be innovative. And I think it's much harder to say, you know, here's a big investigative piece about this company. If the company has been honest about some of the challenges along the way, there's nothing, you've just taken the wind out of the sails of the investigative piece, right? I think there are clearly situations that warrant investigative pieces, and I've written many of them, like back in the day, where clear fraud was committed, or some kind of real wrongdoing that rises to that occasion. Maybe it was Medicare billing fraud or whatnot, like things that were borderline, you know, legal, if not illegal. Like those things obviously should get reported on by investigative journalists. But, you know, the stuff that I think is just operational growing pains, I think if we were more transparent as an industry, I think we could help each other through a lot of that and make it so that none of it was surprising, you know, along the way. So I would encourage founders to share more of those playbooks in whatever ways that you feel comfortable to do so.
I feel like, just to echo some of what you're saying, that I don't know, my personal opinion is that maybe it's the law of large numbers, but a lot of these things, maybe not outright fraud, but a lot of sort of things that are perhaps being hidden or not reported, happening in private companies. You know, when I remember, like, it was like 15 years ago, mutual fund industry had this law that they were basically they had to report like one pager of their financial information. So even like an average investor who had no idea what finance is kind of understood like very simple financial numbers. So I feel like if we had something like that, especially in private industry, especially in health tech, just basically, every quarter, like whatever, or even not even like the full like quarterly report, but maybe like a one pager just about your finances, like where you are. I feel like because they don't have to report that, a lot of things being exaggerated. I was writing about Hippocratic AI when, the biggest investor apparently was like exaggerating price of the product like 5 times the market value just because they're investors and it's in their interest to do so. So I feel like simple information, as you were saying, transparency would have solved a lot of those problems.
Yeah, I think it would be a lot to ask to get companies to share more of their financials because they've been trained over the years to not do that. That said, we could all be savvier, like on the side, the group of individuals, whether you want to call them journalists or not, that put spotlight on these funding rounds. All I do is mention them now in a weekly roundup at the bottom with a single sentence, because company raising X amount of dollars means absolutely nothing. Like, you raised $1 billion. Okay, you raised 100 million, you raised 10 million. Cool. What's your revenue? What type of revenue is it? What is the multiple of that revenue? How does that compare to other companies in the same peer set? As an investor, I'd want to be asking all of those questions. And of course, I'm receiving zero of that information as somebody who would be publicly disseminating it. So I give it a single sentence, because to me, that is all that is warranted, with that brief kind of mention of a data point that means nothing in context. If you want to give me more information, then I would consider giving you, more space in my newsletter. But the vast majority of companies do not. So I would say it's partly the entrepreneurs, partly why do we give so much oxygen to such incomplete information that companies choose to share, that paints like one piece of information tells us absolutely nothing. And I could I think the real conversations I'd want to have are like, why did we, it may seem like we've just given 3 women's health companies unicorn status, but why did it take like one of those companies to have like 250 million in revenue to get that, unicorn status? Whereas we're happy to give unicorn status to like some AI company led by a tech bro with 10 million in revenue. Those are the right questions to be asking as an industry. Not to mention, like, what are some of the differences in business model? What are we seeing from a go-to-market perspective? I think it's that like 2, 3, 4, 5 layers deep, level of context and contextual awareness that we just do not talk about at all. That to me is really sad. Like, I think it would move our industry forward to an amazing extent, with that level of depth. And I don't see it outside of the VC firms having these internal dialogues, and that's pretty much it. Even the founders don't have access to this information about their own kind of peer set.
Yeah, so very so. Alex,
It's gonna get better, Sergey. Don't worry.
I don't know. I hope so.
I wanted to kind of shift gears a little bit and talk a little bit about your newsletter. So you invest in health tech startups through Strap Capital, advise them through Manat, cover them through Second Opinion, and convene their leaders through Fortune Brainstorm Health. So when you sit down to write a newsletter that probably like 50,000 plus people are going to read, how do you decide what to write and what not to write?
Yeah, it's I'm sad to say that it pretty much is just what I think is interesting is what I write about. So right now I'm writing a piece about how companies are hiring partnerships roles, and what partnerships is unlocking for digital health companies. And are these glorified assistants, or are these individuals that are commercially minded and report to the CEO and have a P&L? It's stuff like that, which just sounds so nerdy, but I guarantee my audience will really enjoy that piece and will probably learn a lot from it. So I'm just spending the week talking to heads of partnerships at different companies to try to answer some of these questions. You know, last week we did one on the future of EHRs, and whether or not there is potential for an AI native EHR company. That one did extremely well. So these are like really grokky, like I said, fully acknowledge that, really, really grokky topics. But I think the things that interest me are honestly the things that interest a lot of the people that read Second Opinion. We are hiring. We just brought on a part-time writer, Ruth Reader, who came out of Politico, and she's really much more steeped in policy. So I'm excited to do more of that and experiment and see how that goes with our audience. I think they will love it, just given that I personally would love to get more steeped in policy. But again, it's stuff that interests her and stuff that interests me, and we just hope that, you know, the audience continues to enjoy it.
I love it. I think it's great when you have to write about something that bothers you and not just what people want and you don't really care about. So yeah, this is awesome.
I wanted to ask you about, I guess, private companies in health tech becoming IPOs and like this whole exit thing. Not long ago, you mentioned that I guess, digital health industry has had the IPO winter. You know, last year we had a few names that went IPO, but you know, not too many. And I never understood like what does it actually means, the the IPO window, you know, opens and then it closes or whatever. Um, we had Haley Taco not long ago, and she was pretty honest about her like early you know, venture, her company. She said that, you know, we fundraised in 2018 when it was very easy, and we sold in 2021, probably the best year to sell, and it was just luck, you know. So, so like maybe you have some observations, like you know, are we like in a good IPO window right now in health tech? Are we not in a good IPO window? How does it work?
So we're at a time of a lot of uncertainty in the market and some very irrational behavior, which is where I think a lot of companies are quite nervous to go out. There's also a question of, are these companies too small to be public? I think you see that with some of the businesses that have already gone out, that they are sub 10 million in market cap, and that can be tricky because, you know, you see one even slightly negative or under, you know, expectations aspect to an overall good earnings report, and it can really tank the stock even just momentarily. So I think the market doesn't really know how to value the growth potential of a lot of these businesses. And then you have this issue within kind of equities research where health tech or med tech is viewed, you know, specifically the health tech part of it is viewed as so subscale that the like best people on the team don't want to be having to cover these companies. They want to get immediately into med device or pharma or something with much bigger market cap businesses. And so again, it's like a lack of understanding, a lack of tenure. And so that's all negative, right? That said, companies that are close or could go out do track what's happening in terms of deals and exits. And I think the Talkspace acquisition was actually very important. We wrote about it in the newsletter. Sold to a company called UHS. Gave that business a, you know, 3 to 4x revenue multiple, which is actually quite good when you look at what happened to Accolade and the sale to Transparent. So we're seeing some positive signs. If I'm a Lyra, I might be looking at that and thinking, oh, okay, maybe this is a window. Given the reaction seemed quite positive to Talkspace's shift from D2C to B2B. So I think that was a positive sign that a lot of investors will be watching. If we see another deal like that shake out, I could see a lot of potential IPO momentum this year. But we'd want to see a couple more deals like that look like we're moving kind of in a positive direction. Because if you invested at the growth stages of these businesses thinking they were like, you know, a 10 to 20x revenue multiple, that's still not, you know, super exciting to see even a Talkspace, which I think was a all in, like quite positive, given, the industry writ large and perceptions in the public markets. So anyway, that was a very long diatribe about it, but I think that's really the crux of it. Is it's not a great time overall, but we're seeing some bright spots.
Yeah. It's interesting because I'm actually following some of the actually on the public side because there's more financial information. Actually, the median across the companies that I follow, which is about 200 digital health companies, public companies, 2.6 revenue multiple. So it's kind of interesting. We're talking like 20x, 40x for some of these companies, and then they become public, and all of a sudden, like you hit with this kind of like realism that maybe it's not all about this hyper growth. Maybe investors, I guess in this case public investors, like started looking at earnings. All of a sudden it's like, oh my god, like we never talked about profit, and now like we have to, and so I feel like especially after 2021 a lot of this IPO exits, they they haven't done so well just because they were perhaps exuberant during their private years, and all of a sudden they're facing this reality of sort of public investment. So I don't know if you want to comment on that, especially since there are a couple of companies like Omada and Hinge. Not to say that they're not doing well. They're kind of okay, I guess, after the IPO. But maybe you can comment like on a general story. You mentioned, for example, you're talking about secondary market. I've heard you making some comments that it's going to be the year of secondary market boom or something, and I actually agree with that. That it seems like in many cases the secondary market, if the secondary market is growing, I feel like why even go IPO? Especially if the window is not there, if we have so much uncertainty. Just do a little bit, here and there in certain secondary market. It's expanding. It's becoming a little bit more liquid, especially in health tech. I don't know what are your thoughts there.
Yeah, I think it makes sense. And it's a way to provide some liquidity to early investors and employees. The challenge with the secondary market is it can be very difficult to access some of those deals. And you see employees in particular not necessarily even knowing that this is an option that's available to them. But it definitely unlocks some liquidity. I think I also see a trend around founders taking money off the table at rounds. I think that's more common once the company is profitable already. But to your point about profitability, it's a really tough one because you also have to grow. So I don't think you could just be profitable and not growing. And that's the challenge, is you need to somehow do both in this market. And a lot of companies have been trained in the school of don't worry about profitability at all, just grow. And now we're saying worry about profitability, but also grow. So we need these businesses to be a lot more efficient and a lot more successful than they've ever had to be. The positive spin on this is that I think they can be. And I do actually think tech-enabled services now have a real moment. It's almost like to borrow a phrase from my friend Keaton at Bridge, it's a 3.0 moment where you can layer in AI for a lot of efficiencies, where insurance contracts now are much better understood, and companies are moving much more quickly into these B2B insurance contracts, which also brings down the price of acquiring customers. I think we're also finding that virtual care works in specific areas, parts of healthcare where there's a massive need, and that there are a lot of pent-up demand amongst patients. So you see a lot of organic interest in these companies. Menopause is a really good example. Obesity management is a great example. I think now you could build these companies much more efficiently, requiring much less capital. I think you can build them to be AI native. And I don't necessarily think the outcome is an IPO. I think these could be PE businesses, just like they always have been. So I think we've started to get more sophisticated around who are the right capital partners for these specific companies. Is it debt? Is it PE? Is it venture? Is it a mix? Should we build these companies to not require so much capital over time? And then, the role of AI now, I think is really interesting for those companies that have chosen to capture it. I actually have more conviction about that AI native care delivery than I do around some really expensive, tools company trying to sell into a buyer that doesn't necessarily have the sophistication to even be able to properly integrate the technology. So I think it's a real moment, and ironically, I would say these businesses might even be undervalued right now.
Interesting. Kind of moving from recently IPO'd companies to big tech, and you've covered big tech in healthcare for a decade. You broke the Facebook hospital data story, the Apple medical records scoop, Amazon's FDA hire, and you called healthcare big tech's white whale. So after Google's health shutdown, Amazon Care collapse, and Apple Health team layoffs, is there a single big tech healthcare bet you'd actually put money on?
Is Amazon, because they're used to low margin, they're very good at logistics, and they seem to have found the right corner of the market where they can play to their strengths, which is mostly delivery of supplies and pharmaceuticals. I think for some of these other companies, it's always been a problem of like they're just so big that what can they even do in healthcare, which is not really a 4 trillion TAM market. It's lots of teeny tiny, not even that small, but much smaller markets that are very siloed. And for them, I think it's really challenging to consider, given how big they've become, if you're an Apple, what can you even do in healthcare that would justify, that investment? And I think the watch is interesting. Wearables certainly have been, people have been more interested in them lately. You see the rise of Aura, Whoop. So that is an interesting area, but outside of becoming a payer, which I don't see happening, what is the really big swing opportunity in healthcare that's worthy of their time and money? And I honestly don't know the answer to that. And I think a lot of smart people who've cycled in and out of that company haven't known the answer either. So that's kind of the challenge across many of the big tech companies. And it's definitely something that I continue to pay close attention to and cover in Second Opinion.
I guess the last question I have, of course, we have to talk about AI maybe. You called AI disappointment in digital health back in 2017, and then I remember you also called telehealth at its peak, I guess, in 2021, 22, that it's kind of, I guess you said it was like an emote.
Yeah,
And
I don't know. I guess I'm like too outspoken.
no, I mean, it kind of came true, right? Like, I've been also writing about that. I feel like, and I completely agree with you that we're probably over the peak there. And I guess my question is about AI. So now we had this. Actually, our very first show was why the hell do we need 126 AI scribes in the industry? That's how many I counted. And when I did my analysis, looked like what everybody was doing, or at least most of them. A lot of them were basically copycats of one another. We had Shiv Rao in our last show. I think they're doing some cool stuff there, but most of the industry is kind of like copycats, basically. So, personally, I feel like there's a lot of hype. But I'm just curious about your opinion. Do you think, in particular, like ambient documentation market, is it a breakthrough in AI, or sort of same kind of hype that you've noticed in kind of previous times with other tools, other I guess products?
Well, the one good thing it has going for it is it is definitely a very big problem to be solved. I've seen a lot of AI companies where I'm like, what is the problem here that you're solving? Seems like a very minor efficiency or way to slightly make our broken system a bit more broken. So that this one, at least, like, this is a real problem. Solving the burnout crisis amongst providers is a hair on fire level problem for a health system. So that's where I think you've seen massive penetration into health systems in a very short period of time. And that we haven't seen many times in healthcare. So, I give this group of companies like massive props for identifying that. I think the big existential question is, like you said, there's a lot of competition here. How is that all going to shake out? I think the other one is Epic, is obviously the elephant in the room. And I would bet against Epic coming up with a solution to potentially compete in an extremely nimble way, but I wouldn't count against them building that solution to compete that's good enough eventually. So that to me is a problem. But how do you then, if you have the level of scale that an Abridge does, or an Ambience, Nuance, some of the big players in this space, how would you then expand outside of ambient scribing? Are you looking at ambient scribing and documentation at home care? That's an interesting opportunity. I've looked at that closely. Are you looking to become a clinical superintelligence company because now you've collected millions upon millions of encounters? Are you moving into the revenue cycle space, and how are you doing that? Is it through build buy? Is it through partner? And what is the strategy there? So I think that's now the next frontier. It's not enough to have just sold a bunch of health systems with, this core product, because I think Epic is going to compete. It's then taking that and moving, swiftly into the next domain where you could build more of that moat. So I think that's what I'm watching closely. One interesting exception, though, to the rule is Heidi. I just spent a bunch of time with them. They basically said, we're going to focus on markets that are not the US, Australia, Canada, France, UK. Gave it away for free to a lot of physicians, got massive physician adoption, and then sold a bunch of enterprise contracts. And that business seems to be doing very, very well. So, in countries where Epic is less of a consideration, these are obviously smaller markets, but when you pile them on top of each other, I think that becomes a very interesting strategy. So yes, big problem to be solved. Glad to see all these companies doing it. But then those are the things that I'll probably be looking for over the next couple of years to see who's got true longevity in the space.
Yeah, and it's interesting because a lot of things you mentioned, including the Epic kind of concern for the scrap industry, we ask a lot of these questions, Shiv Rao, in our last episode. So it's kind of like almost like continued conversation. So it's interesting. Thank you.
Yeah, of course. Well, it was such a pleasure joining you and chatting with you both.
Thanks, Christina.
Thank you so much, Christina. Thank you.
Cheers.